Hey everyone, welcome back to Corporate Decoder, the place where we decode the corporate world. Today we're diving into Ranger Energy Services' proxy statement. Get ready for some boardroom drama, because even proxy statements can have a plot twist or two. Ranger Energy Services had a pretty good year. They brought in over 571 million money, and their adjusted EBITDA, which is a measure of their profit before some expenses, was almost $79 million. They also returned over 40% of their free cash flow, which is the money they had left over after expenses, to investors through dividends, which is like giving investors a share of the profits, and share repurchases, which means they bought back some of their own stock. The company really wants to make sure their investors know what's going on and understand why Ranger is a good investment. They claim that the efforts in 2024 yielded strong results in the market. It's good that they mention that they use non-GAAP numbers. GAAP, or generally accepted accounting principles, are the standard way companies have to report their numbers. This is to keep things fair. This filing is a definitive proxy statement, which is a document that a company sends to its shareholders before an annual meeting. It contains information about the matters that will be voted on at the meeting, such as the election of directors and the approval of executive compensation. The meeting is set for May 9, 2025. It is virtual, meaning you can attend online. The key things to vote on are electing directors, which is like choosing the team captains, ratifying their accounting firm, which we'll explain later. The board has specific recommendations, and for all the proposals, they recommend that you vote yes or for. Two board members, Michael Carney and Krishna Shivram, are up for re-election. If they get the votes, they'll be in office until 2028. Michael Carney has been on the board since 2018 and has tons of experience in the oil services sector. He even served as CEO of another company, Frank's International. Krishna Shivram brings a strong financial background to the table, serving as managing partner at an investment firm. He also used to be CFO of Weatherford International. The board is always on the lookout for good candidates, seeking recommendations from current directors, senior management, and even stockholders. They have specific criteria to ensure that the board members can make unbiased decisions, making sure they are independent. The audit committee are the financial watchdogs. They oversee the company's financial reporting and internal controls, making sure everything is on the level. The board adopted stock ownership guidelines for directors and named executive officers in October 2024. This means they want executives to have skin in the game by holding a significant value of the company's shares. Here's a peek into what the directors get paid. They all get a base retainer of $75,000 with extra pay for chairing or being on committees. For example, Carla Mashinsky, who chairs the audit committee, made over $250,000 in 2024. Grant Thornton billed almost $1 million for their audit work in 2024. That covers checking their books, including the annual report and quarterly reports. Now let's talk about the top executives, starting with Stuart Borden, the CEO. In 2024, his salary was around $564,000. He got a bonus of over $354,000 and stock awards valued at over $2 million. All in, his total compensation was nearly $3 million. Melissa Coggle, the executive vice president and CFO, took home over $1.4 million, and Matthew Hooker, executive vice president, wealth services, made almost $940,000. The filing includes a pay versus performance table comparing executive compensation to company performance. It looks at CEO pay, average pay for other top execs, total stockholder return, which is the return on investment in stock, and net income, or how much profit they actually made. This is required so you as an investor can determine if pay is aligned with performance. If you invested $100 in Ranger Energy Services in 2021, by 2024 it would have grown to almost $154. Net income was also positive throughout this period. This table shows stock awards that the executives have that haven't vested yet, meaning they haven't fully earned them. These shares vest over time, meaning they unlock a little bit each year as the executives stay with the company. Ranger offers standard benefits to its employees, including a 401k retirement plan with a company match. The company has agreements with top executives to protect them in case something happens, like getting fired or the company being sold. Finally, stockholders are voting on the amended and restated long-term incentive plan. This is how the company gives employees stock and other awards to motivate them. They're increasing the number of shares available under the plan by 1 million. There are other important conditions, one being for any outside director, not more than $500,000 or 100,000 shares for awards each year. This provides the different goals that the committee can apply when determining success of individual, and it ranges from total sales to brand reputation or environmental ethics. In addition to the various terms and definitions, there are also mentions of legal jurisdiction and power, giving the company certain rights if there are any issues. Done to now. Looking at Ranger Energy Services overall, there are a few key takeaways. On the plus side, they're profitable and generating cash and returning some of that to investors. Their stock also performed well. Management has big stock ownership, which signals they think stock price will go up. Also, it's clear that the board is independent and experienced. These are all good signs. On the other hand, it is unclear where Ranger gets its competitive advantage. As you might know, there are a lot of companies in the energy services. So what makes them special? So should you invest? That depends on if you think they can continue to improve. Thanks for watching. If you found this breakdown helpful, please like, comment and subscribe for more deep dives into the corporate world. Let me know what company I should investigate next time.